The Monetary Policy Committee of the Bank of Ghana has increased its policy rate by 100 basis points from 13.5% to 14.5%, citing inflationary pressures. In a statement on Monday, the Bank of Ghana said inflationary pressures are becoming embedded in most advanced and emerging market economies, with potential implications for the current supportive financial conditions driving the recovery. It said the headline inflation had risen consistently from the low of 7.5% in May 2021 to 11% in October, driven by both food and non-food price increases. The statement said all the bank's core measures of inflation had increased, indicating broad-based underlying inflation pressures with the potential of de-anchoring inflation expectations. These risks, the statement said, include rising global inflation, high energy prices, uncertainties surrounding food prices, and investor behavior. The committee noted that these elevated inflationary risks required prompt policy action to re-anchor inflation expectations to safeguard the central bank's price stability objective. The statement said the global economy had continued to recover, but the intensity of supply constraints, including slack in the labor markets and shortages in intermediate goods, has moderated the pace of growth. It said overall, the risk to the near-term global outlook is tilted to the downside in the wake of the resurgence in COVID-19 transmission rates in some advanced countries and premature monetary policy normalization due to persistent price pressures. The statement added that the increased concern about the strength of the recovery and a stronger US dollar has exerted currency pressures in some emerging market and frontier economies. In the domestic economy, the recovery in the real sector was progressing at a steady pace. It said high-frequency economic indicators reflected increased momentum in the pace of economic activity close to pre-pandemic levels. The Monetary Policy Committee added that consumer and business sentiments had turned around, driven by perceived improvements in economic prospects, although consumers expressed concerns about current household finances. The committee decided that macro-prudential policy measures and regulatory reliefs announced at the onset of the pandemic should remain in place to support a more robust recovery of the economy.